Good morning, everybody. This is Toni Turner, and welcome to the market now as of about 10:30 a.m. Eastern on Friday, February 12th. And hey, it's almost Valentine's Day. Happy Valentine's Day. Wall Street staged a modest comeback this morning, led by a rebound in financial and energy stocks after we witnessed a punishing widespread rout this week on concerns about the health of the global economy. 9 of the 10 major S&P sectors are lower in the moment, led by a 2.2% rise in the financial sector, which had slipped 17.7% this year minus today's gains. Today's gains in the financial sector were led by JP Morgan. They saw a 5.1% gain after Jamie Dimon said he was buying back a lot of stock. Also this morning, the price of U.S. crude, which has been in a tailspin for more than a year, soared nearly 7%. The United Arab Emirates energy minister said OPEC was willing to talk about cutting production. Finally, this morning, positive consumer spending data also helped boost sentiment. Now let's look at 3 charts that could give us some insight into the week to come. Now, first of all, we're going to look at a very, very important chart this morning of the S&P 500 SPDR, symbol SPY. This is an exchange-traded fund that very closely follows our S&P 500 index. We use it because it's a tradable. You can trade it if you want to, or invest in it, I should say, and as well, we can see volume on it, which you can't see on an index because indexes themselves are not traded. So let's look at this daily chart of the S&P 500 SPDR, the SPY. We can see that as I captured this chart this morning, it's trading at $184.40, which is right around $18.44 on the S&P 500 itself. We see it's trading at a discount to the red line, the 20-day moving average, quite a discount to the green line, the 50-day, and of course the 200-day is way up ahead. So we're right down here at this, again, at $184.40 when I captured this chart. Now, here is the red line in the sand. This is drawn at 181, and it is a very, very, very important line. It even goes back into 2014, I believe it's November of 2014. And if we can stretch it left here, which I can't do going that direction very well, making a straight line. Maybe this will help a little bit. This support of 181 or about 1800, we can call it, on the S&P 500 goes way back again into 2014. Very, very important that we watch this. As we can see, and as we know, yesterday's low of the SPY was 181. It's down about 13% this year. And this line, again, this potential support line is very, very important. So if all you do next week is watch the SPY or the S&P 500, you're going to want to look for 181 as our line in the sand, and that's because a lot of other people are watching it, and if the SPY were to move below and close below 181, that would probably take quite a few stocks with it. We know that in a bull market, 3 out of 5 stocks will follow the S&P 500 higher, and in a bear market, 4 out of 5 stocks will follow the S&P 500 lower. So that's why we're watching this line so closely. We want to be wise, we want to be disciplined, and we certainly want to know what's going on in the next week. It's going to be a very important one. Okay, our next chart today is the Market Vectors Gold Miner ETF. As a lot of you know, the gold and the gold miners has shot higher in the last 2 weeks. And if we looked at a chart of the S&P 500, we saw that a minute ago coming down like this. Actually, the GDX, the Market Vectors Gold Miner ETF, has shot up dramatically as we have a lot of worries here about slowing global economies. A lot of worries here, a lot of worries about banks, especially in Europe. So when people get worried, and gold has been down for a long time, when people get worried, they buy gold, and when they do, the gold miners rally. Now, this Market Vectors Gold Miner ETF, again, the GDX, top components are Barrick Gold, Newmont Mining, Gold Corp. It basically follows the ARCA Gold Miners Index. Actually, it shot up about 17% since its low, January low of 1240. That's what I was looking for. And right now, though, it shot up so dramatically. If we look at what a huge premium it's trading at over its 20-day moving average. If we look at the 14-day RSI here, we know that it's trading at or above 70, which means it's overbought. It's moved up in such a dramatic angle here that I suspect in the next week or so, next few days even, maybe gold is going to come down a little bit. We know everything trades in cycles. We know nothing goes up forever. This has been a great move up, and it may continue up longer still, but I suspect it's going to have to move down a little bit. So if you're not in the gold miners ETF, the GDX, or even the GDXJ, which is the junior gold miners, you may want to wait a little bit here. If you didn't see this earlier on, you may want to wait and see if they can pull, or it can pull back down into the $16 area or so. Right around in here is where I'd rather get back in so that I have more upward momentum. I'm not real fond of buying high and then riding things back down and seeing where they're going to stop. So I suspect in the next few days this may come a little lower. Can't promise that. We never know for sure. But it's an idea if you're looking to get into gold miners or the junior gold miners ETF. Now, our next chart of the day, this is a little more of a bummer here, but I think it's going to turn around at some point. This is the chart of the United States Oil Fund, the USO. The United States Oil Fund is a fund that tracks the price of our U.S. West Texas Intermediate. It doesn't track the actual price. It tracks an index of oil futures. And as we know, oil futures or oil prices have come down dramatically in the last year. Now, we talk about the XLE, the Select Sector Spider Energy ETF, and I know a lot of people are chomping at the bit to get into it, but I personally am going to wait till I see if the price of oil actually starts rallying pretty soon. Now, we had a support low here of 792 on the USO, and that was, let's see when that was, January 20th low of 792. It then rose up over its 20-day moving average to 988. Then it fell down yesterday's low to 767. Now I know that it was up this morning, and we look at this big volume spike, and we know that yesterday it was up a little bit, and it's actually up today. It's just kind of consolidating right around the 805 area. It didn't move up as much this morning as I thought it would, or stay up as long as I thought it would, given the news about OPEC. However, I'm watching this like I'm watching the SPY. I'm watching it for information. I want to see if, in fact, oil can go higher here. Certainly, we have a lot of interest in it. Look at all the volume here that you can see coming into it. Certainly, we have a potential bullish divergence on the RSI, but this doesn't show me a really firm reversal to the upside yet. So I'm going to keep watching oil and the USO before I jump into oil stocks. Now we'll go on to next week's economic reports. But first, please join us this coming Tuesday. The markets close Monday. This coming Tuesday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. By the way, in Toni's Market Club, we got into the GDX about 2 weeks ago, week and a half, 2 weeks ago, so we did get that move up. Toni's Market Club is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you can't attend our live session, no problem. The recording of this session is available to all of our members a few minutes after the session ends. And now for the coming week's economic reports. On Monday, it is closed. The market is closed for President's Day. Tuesday, we have Empire Manufacturing. Wednesday, we have building permits, housing starts, the producer price index, crude inventories, and the FOMC minutes. Thursday, we have weekly jobless claims and the Philly Fed. And on Friday, we have the consumer price index. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.